Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, February 20th. Well, we did have another up day yesterday in the markets, as usual. NASDAQ up 20, S&P up 11, Dow up 53, and, of course, the dollar down ever so slightly. Partly due to some good housing data we had here, the NBA Housing Market Index, and, of course, we did have some M&A merger activity, talks of some activity, so that kind of fueled the risk-on mentality. Markets did push out some of the sectors that we follow, which I'll show you on the charts, did push out of our consolidation that we've been in for the last 5 or 6 days, trading days. But nonetheless, markets are really no change. Our indicators are still screaming overbought. Markets are grinding higher, no volume. And when I tell you, I know when people look at the markets at the end of the day, when they're looking in front of the screens, oh, wow, the market's up 53. Nothing is going on. It's been very, very quiet. And that's when the discipline has to set in on the trader and say, okay, what am I looking at? What am I doing? If I don't see anything, there's no reason to trade just to trade. We need to be nimble and we need to be professionals and say, I'm risking money here, so if I don't see anything, I'm taking a step back, waiting for the next trade to happen. And if that does happen, prepare your day for the next trading day. Okay, so onward. Now, what do we have? A few traders, seasoned traders that I spoke to yesterday saying, it's crazy. This market is running up every day. There's no volatility. Yeah, should the market be up here at these levels? Absolutely not. We are getting some good economic data, some good manufacturing numbers, but they are slow, and the market is recovering at an ever so slow pace. So the markets are way ahead of itself, and the markets are a discount mechanism, right? They discount what they see a couple years out, and I understand that. But when you have a market grind higher every single day since January 2nd without any sort of meaningful pullback, it scares me to say that when something does happen and there is a catalyst for the markets to sell off, there's only one door and one exit. So everybody that are buying into this market up here, and they are because we had largest mutual fund inflows January and February, so they're putting money to work up at these areas. You need one negative catalyst and everybody runs for the exits. Now, am I saying that we're going to have a crash? Absolutely not. I don't think that will happen at all. But a 3-4% correction is very healthy for these markets, and that's what I'm kind of looking for to say, hey, you know what, maybe we can get aggressive now. A lot of the overbought readings have been have unwinded itself, and now we're starting to move higher again. So that's fine. But when you have world markets, like I mentioned yesterday, and I showed yesterday, starting downtrends, and the S&P continue its uptrend, that's not really a good sign. We have market divergence, worldwide divergence of different economies that are now starting to roll over when we were all in sync, started in last November and moving higher, and now things are starting to move against us, meaning the U.S. market. So that's a big red flag for me, and I'm doing what I'm going to usually do is buy the trend. The trend is up, or I'm going to sell relative weakness. And that's really what I've been doing for the last 6 to 8 weeks. And no, I have not been active, extremely active, but that is the right way to do it. Reduce your share size until the market adjusts up. There's going to be plenty of opportunity out there when that time comes. And it'll be so busy eventually that you're not going to keep up with the pace of what the market's doing. So keep the pallets dry. Be nimble and be ready for action. That's my advice to a lot of the traders out there. Okay. Anyway, this segment's going to be small. There's really not much going on, but I do want to show you a couple of interesting things here. First, let's get into the new highs and new low. We're back up here at these levels again, as you can see here. Again, over 100 when the market stays above the zero line. This is in a bullish uptrend, and this is what we've been having, of course, obviously since August, and we've been on this bullish configuration. But when we start to spike up here, look out for some of these little moves here. But obviously, we did get one spike. We came right down here. We had a little bit of a 2-day sell-off, and then the markets now have grinded back into overbought territory. Now, this is not really overbought as of yet. Still more room to run here. I know how crazy it sounds, but it's still more room to run. Now, look at the new lows here. Keep an eye on this. I showed this to you last week, and I mentioned watch this thing. Anything starting to break above 60 is interesting. Markets are starting to move up, but new lows are starting to tick higher here. So they're starting to have a rotation. Now, if it's a rotation, a standard rotation is really not much to worry about. But if the market as a whole starts to sell off and you have this new low starting to tick higher, you're going to have an issue here. That means that we have problems. We're running higher on very little positive catalyst where the markets itself are starting to sell stocks, and now you basically only have several indices really carrying this market instead of fueling the whole market itself as one. So this is interesting. So what I'm going to be watching for in the coming days. Those are the only two. The other thing is copper. Copper got smashed yesterday while the markets were moving higher, and I did a little more research. Couple of big statements came out of China, how they're reducing their construction, and what does that tell you? So if the construction and housing is starting to, they're trying to pull the reins back a little bit. Well, obviously copper, which is an industrial metal, that's the first thing that they're going to start stockpiling, right? So they're going to stop stockpiling copper, PVC, any kind of building goods. So copper actually sold off pretty hard, major distribution day, and again, totally different, divergent from what the market's doing. Copper is a major leader in equities, believe it or not, and if it doesn't follow suit, then you have some divergence here, and that's what happened. Now, it could be just what happened with China yesterday, so we'll need to see again if we could take back at least half of this candle today. Now, look at the weekly chart. We're back into the symmetrical triangle. Let me just open that up for you guys. We're just ever so slightly back in it again. We're testing this symmetrical triangle here, this upper trend line. So it's just something to keep an eye on. Copper is definitely something that's a leader, not a lagger. So I would definitely be watching something with copper. Now, let's just take a look at the dollar real quick. Dollar was off a little bit, small 14 cents, but now we do have this two bearish patterns, right? We had this head and shoulders pattern, right, which is going to be negated any day now if we start to break back up. And then we have this descending triangle, which now we broke up out of the descending triangle, which is basically negated. Now it's only a day, so we can actually come back into this channel here. Take a look at our ratio, US dollar SPX ratio. As you can see here, we're still rolling over, so that needs to really break up. And of course, our stochastics are reading overbought. So let's see what happens with the dollar. Right now, the dollar is inversely correlated with equities, and if we do have a big move higher in the dollar, at least for now, that'll put some pressure on what's happening with precious metals, and that's what I'm going to lead into next. I have a lot of talk about gold, and of course, the gold mine GDX. Now, gold has been taking a pounding in the last several months, and where we are with gold is here. We are now looking at this area at 1600. A break of 1600 is going to get us, and as you can see our volume profiles, we are now basically at the last leg of this area. We have a small little support area here, this little cluster. A break below 1600 would probably rush us down to 1575, 15, and even 15 and a quarter. So I would not be touching gold here. I'm not looking to pick a bottom or a top. I'm looking to get the meat of the move, and I'm waiting to see our ratio roll back up, and I want to see the stochastics break above 20. And then we have some sort of a trade, a 2, 3, 4 day bounce. Gold needs a lot of proving itself, obviously, to see that we are down. We have stopped the downtrend. Until that happens, gold itself is, to me, is a stay away. I would not touch gold right now. And if you look at the GDX, and I have a couple of pictures of GDX which I want to show you. Here are just the main pivots of GDX. As you can see, our ratio chart, we are oversold, right? But again, oversold is not a buy signal. We do have a cluster area here at 1460. Actually, we broke down. Believe me, excuse me. We broke down below the $40 range here, and we ended up closing at 39.37. So we took this area out on a closing basis. So today we need to either get back above 40, or I think the downtrend will continue until this market, until this sector itself can stabilize. I do have one more picture of gold, which we're going to get into the charts right now. And let me show you the GDX daily. Here's the GDX daily. And usually, the gold miners would really outperform before the metal itself. And this is not what you're having here. You have gold breaking down, and you have the GDX, the Gold Miners Index ETF, breaking down. And it's hugging right here, this last little pivotal low, which is going to be the 39.37. I wanted to show this to you. Stochastics are way below -5. MACD's are low, and we have distribution days coming. So I wouldn't look into be buying this. If that's your thing, great. But I'm not looking to pick a bottom and or a top. I'm a trend trader, so I look to see a reversal a couple day consolidation and breaking out of that consolidation high, and then I'd be looking for it. And even then, when the market does pull up, you're probably just looking at some sort of a bear flag pattern and then break lower. Okay, so now let's get into our S&P. Average true range versus the S&P 500. I've showed this to you many times. We are now back below the low end of the range. Do have a little bit of support here. We did break below, but you see we're starting to kind of curl up. When the ATR starts to move up, that means volatility is picking up. That will also mean that we're going to get some volatility. And up at these areas, when you have volatility up at these areas, usually you get some sort of reversal. But again, long way to go for that. I just wanted to point that out and show you that ATR chart. Now let's take a look at our spiders. Spiders broke out of that consolidation range. We have one large channel and one little small channel here. This is from January 2nd. This is the December 31st with the fiscal cliff issue. We broke back up, and then we never seen it anymore after that. Really kind of amazing, to be quite honest. But nonetheless, you can see our MACDs here just kind of curling around the signal line. Stochastics well oversold. Overbought, excuse me. And what you can see here, look at the volume. We popped up volume very, very light. We had one red candle, big selling distribution. So I would use extreme caution in this market, guys. I'm telling you, when the markets are made to fool the masses, and when that time comes, when you have extreme complacency, it's only one thing that could spark a big sell-off. And I'm not saying that I'm looking to go short the market. I am following the market. I'm buying longs and I'm selling relative weakness to the market itself. And that's what I'm doing. And I'm taking small little positions until otherwise noted. Now, as you can see here, we broke this trend. We're way above our 20. Our 8 EMA, which is our momentum moving average, is hugging that. So looking real constructive. And there's really nothing wrong with the market general as a whole. Other than the fact is just we haven't had a pullback. We're starting to get some divergence here, and of course our world markets are actually starting downtrends, and we'll continue to moving higher. Okay, so we're still looking for the 150-150 break, and on a closing basis, that would be our first pivotal low to break. That would get me more enticing to look to sell the market here. Of course, 149.80 would be our secondary, and these are the two that I'm looking for. Still looking for this break lower here. So we'll just keep an eye on it, let the market tell us what to do. All right, S&P cash. Our CCI index market popped up big, and look what's happened. Our CCI losing momentum to the upside. Again, a warning sign. Nothing to tell you to short the market. I would not look to just go out and short, but again, it's telling us that we are now losing upside momentum. 14.95 will be our next support line. Of course, you got the 20 break lower. We have some support down below here. 15.20 would now be support, acting as resistance before, and now we're breaking up higher. Now let's see. Excuse me. I would love to see a blow off top. I would love to see this market open higher today, run hard into the morning session, and then totally reverse and close on its lows. That would be a blow off top. To me, that would be a sell signal. Of course, we'd want to follow what the next day does, and then we would take out the previous day's low. But that would be a great signal to me that the market is done, at least for now, and we have a tradable top. Here's the 60-minute big bearish rising wedge. We broke below it, came right back in it on Monday. So again, no change here. As you can see here, our momentum indicators are just kind of moving lower, making lower lows and lower highs. 30-minute chart, as you can see here, what we've been doing for the whole month. We consolidate for 4 or 5 days, one day up, consolidate 4 or 5 days, one day up. And this is exactly what's happened here, and this is what happened yesterday. And most of the indices are moving. Believe it or not, a lot of the stocks aren't moving. A lot of stocks that I've been following or been looking for haven't really been so active following the market. Not saying that they haven't gone up, but when you have the markets that are really whippy, you tend to get stopped out more by looking and say, okay, I'm looking to buy this area here. They just fall out of bed, put your stops, elect your stops, and then roll back higher again. And that's really what's been happening. So I've been just trying to stay aside a little bit and see, try to look for the best trade setups. And that's really what's going to happen here. IWMs, Russell 2000, risk on. And this is incredible, the move. Russell making all-time highs again. This is a crazy market that we're in. But I'll tell you, if it wasn't for the overbought reading, this market is in good shape. Long term, perspective, nothing wrong with it. Now, obviously, things can change, but if you're looking under the hood right now, the longer term perspective, looking good. However, the short term, a lot of red flags. So again, use caution here. But look at the Russell. We have a little bit of Russell. This is at least you want to see is the volume increasing as the market moves higher. So still got room to run here, at least to the 93, 93.20 area. And this is this upward trend line here of the parallel channel. And again, XLF here pushing higher, big bearish rising wedge. Banks to me look real overbought. I'm not looking to trade. If anything, I'm looking to trade this to the downside when that time comes. And diamonds, same thing. Diamonds lacked a little bit. The Dow Jones actually, yes, they were up 53 points, but Dow Jones really didn't do too much here. So just kind of sitting there breaking. Maybe this breaks out today. But Russell did really well. Look at the transports, our leader of the sectors. Now, this is exactly what you want to see, right? Transports, Russell, NASDAQ moving. Now, that is big. When you have the three leaders moving and you have the S&P and, of course, the Dow lagging the four, that's fine. This is what you want to see is a big push higher, big move up, transportation sector on fire. Don't forget, crude oil is actually also moving high. So at one point, if crude continues and breaks 100, I think it's going to put a little damper on this transportation sector. So, again, keep an eye on that. If you're looking to get short, eventually, maybe that may be the catalyst. As of right now, stay away from the short side in the transportation sector. A couple things. Apple, dead as a doornail. Again, if this is only a tradable stock, I think Apple will flush lower before look to build some sort of a long position if you're looking to build a long position. But I would not be looking to buy Apple here right now. Apple is dead money at the moment. And then lastly, the Qs. Qs did break out, as you can see here, starting to break out. If Qs get to run like we have here in the NQ, which is the NASDAQ futures, then I think we have a little bit more room to the upside. Now, do we have room to the upside? That's a good question. Yes, absolutely. The markets will run higher until otherwise. And if you don't think that it can't, trust me, the markets can do what it wants to do. So please be aware of that. Try not to be looking to pick tops. Stick with the market trend for now. The trend is your friend until otherwise noted. Let's see. The markets can't grind forever this way. But until then, let's just be nimble, keep our palates dry, and look for the best trade setups out there. All right, guys, have a great day today, and we'll talk to you tomorrow. Take care.